Vincenzo's Go Crypto Investing this October the 10th, 2025. Cryptocurrency, blockchain technology, gold and silver bullion video that you've come to expect every day for free and work your way and gain the information needed to become asset millionaires. And you can see today the Bitcoin price continues its decline, 2%. The Ethereum price got hit much, much harder at 5.6%. You can see XLM and XRP are down 1 to 3.5% respectively. Uh, Briefly, DGB was up. We've had some other sporadic coins up, but the market's mostly been down today. And it's been a very, very interesting market. Yesterday, the video got butchered because I got interrupted twice by work and then could not get back. And then I had a late night or evening activities last night, so I was sort of busy and didn't have any time, but you can see the Bitcoin price is where we were when the few things we were able to talk about yesterday with the Bitcoin price was we were still on the top side of this major lower support. But we were telling you if you break through this and you end up confirming below it, even though you made a brief new all-time high by squeaking your way up this rising channel, major upper resistance and now lower support, but now it's upper resistance because you're below it again. If you confirm below this, you will drop very, very quickly from the support down to the moving averages. And if you break the 100-day moving average or you come down to it, you will break it. And before you know it, you'll be sitting at 107,000 and change, which is an uptrending 200-day moving average. And from the new all-time high to that 200-day moving average is a 14. And I know you guys always say the sixes and the nines and the threes are the devil's number, and I do it for a reason. That just random spot at the high, random spot on the moving average ended up with 14.69% or 18,556.98 down, right? And right now we're below that major rising channel support and resistance, and that's a 3.5 year closing on 4 year pattern, right? And you can see at the current price. So if you stay below this and you don't come back on in a fairly quick fashion, right? You can see where you're at now. Notice how you step down you step down back to it, right? And then you trade it alongside of it. Step down, traded alongside, another step down, traded alongside. Now you broke through. Now, if you come back up and you have a big volume spike in the hour or 2 hour time frame, and then you knife down and you end up at the 100-day moving average, you're not going to hold it. You've already chipped away at it too many times, and you will be at the 107,000 before you know it. And then eventually making a run at that major critical pattern support where there could be a big, big breakdown. You can see the 79,000 becomes a question if you come down to the 95 and can't hold it. But that's a big move that could happen if you can't hold where you're at and you confirm a breakdown out of this rising channel. Same thing with the Ethereum price, what we were looking at. You can see it actually fell off a cliff. We told you the other day, if you broke to the upside and broke past this, you had a four quadruple top here in the local time frames. You can see that here. We said if you went to the 50-day moving average when you were consolidating the last several days in here, you would not hold it and you'd immediately drop down to the neckline megaphone support, which is 4109. And that's exactly where you drop down to, and you're sitting on it right now. If you do not hold this, the same thing we've been telling you, if you do not hold this, right, even after if you get a little bit of a rally here, but if you slip this, you will not hold the 100-day moving average and you will come straight down to the 200-day, right? And it's two major support levels, the 200-day moving average and the 3485 top part of that major green support box, right? So this is a critical area to hold. And if you look at the hour time frame, you can see on that drop, it came perfectly down to that neckline support, and you're trying to hold it. And if you do not hold it, you will slip that 3962, and it'll be a 25 to 30% down weekend from swing high to swing low. Because if you just take from where the price was the other day, right there, that would be a 20. See, again, I just picked it from the swing high to the support, 26.26%, right? Down to the downside. So you have, if you're in the short term trading this, swing trading it, leverage trading this, etc. That's why we don't advise leverage trading if you want to become an asset millionaire. We advise long term, steady investing into things and assets that appreciate in a dollar depreciating world. Because we have a horrible inflationary monetary policy and the things you understand like 401ks, real estate, gold and silver bullion and mining stocks, cryptocurrencies, right? Simple things that you understand and have steady, consistent investing, and you will become an asset millionaire. Uh, but you can see that's a very, very volatile ride that you're going to be on there in the Ethereum. Same thing with the XLM. We've been talking about this too. If you came back down and now you've broken the 100-day moving average, which we told you you wouldn't hold when you had this miniature rally the last few days, and we said you would come immediately back down, and it's going to be a similar thing in XRP when we go there next. You would have a similar thing where you're going to come straight down to the top part of this green support and resistance box. But like we were telling you, even as the price was up there, we already had all this support and resistance and trading on it for about 2.5 weeks. So all these buyers in support that was stacked there are gone. So the next time you come to this, you're going to slip it. You're going to come back down to the 200-day moving average, but you already took all those buyers out. So the next move down with the liquidity is coming down to the bottom part of this green support and resistance box at 32 cents. But most importantly now, you have a weekly time frame 50-day moving average. And I say significant because it's been a while since you hit the weekly time frame moving average, right? Either on the way up or on the way down. And if we take this and we unlock this and we inch it up, you can see it sitting now at 31 cents. And the last time we went through the weekly time frame moving average was back here in July. And then before that, we hit it as resistance in May and then couldn't hold it as support back in February, right? So we haven't hit it in a little while, and we've been waiting for it ever since that euphoric pump back in July to come back down to the weekly time frame moving average. And I think if you come back down and don't get a bounce soon, you slip that 36 cents in the XLM, you're coming down to the weekly time frame moving average, something we've been warning about ever since you topped out back here on a possible consolidation to the downside. Because if that does happen, I would suspect there would be a very nice healthy bounce from the weekly time frame moving average. And this is speculating when it comes down here, and you would have probably a bounce at least something like that. But then if you got rejected, that could bring into play possibly a 100-day weekly time frame moving average, and that's all the way down there at 25 cents. And that would be 100% retracement from where that big pump started back in June and July, just like the XRP. And that's the same thing here. You can see we're all the way back now. And the last time we're going to go in, we can update these though. While we nope, we did update these the other day. There's the weekly time frame moving average, the daily time frame. The last update that we had, we were telling you if you slip these moving averages, you would drop back down into this falling channel sort of pattern that you had, and before you knew it, you'd be sitting at the 200-day moving average, which that's where you're going now, and then you would be at this major underneath horizontal $2.55, $2.56 in yellow right there. And the reason that's so critical is if you can't hold that, yep, you're going down to the 50-day weekly time frame moving average at $2.33. And again, we haven't hit that since we had the big euphoric pump through back in June and the end of June and July, right? And if we come back down and we don't get any buyers here anytime soon, and you can see all the levels and stacks and regions of buyers that have already been displaced and taken out the last 2 to 3 months as we come down here now for a fourth time, uh, those stacked buyers are gone, right? And I think it's going to not be able to hold, and I think we're coming to the 256. And after a brief rally, I think the odds and the probabilities are getting more likely that the 233 will be hit. And then again, that brings in the potential of a 100-day moving average at $1.77. If we look at and obviously to not do that, you got to get back on top of those short-term moving averages and then get on top of that 307 major upper resistance, right? And you can see here with the DGB, we had a pump this morning. We were trying to pump, we tried to get bullish, we tried to move, but again, we got rejected by the overhead forces, which is that horizontal 0.00838 and the 50-day moving average, the 100 and the 200-day right there in red, blue, green, respectively. And again, we got rejected, and this could be a hook nose bearish reversal pattern. And if that does continue to push, and it's going to be unfortunate, we will lose this double bottom that we had there, and our next move to the downside would unfortunately be the 0.00561, and that is what we're watching because that is potentially where we're going, followed by what should be a decent short-term bounce from there, right? The AMP again, also, it looks more and more evident now that before the up pump happens, we have to come down, and the next move to the downside is 0.00236, and that's very, very unfortunate. But if you have patience, conviction, right, dollar cost average in, I believe next year, at some point during the year, you'll be very happy with the decisions that you made, but I'm not a financial advisor. Speaking of financials, US stock market capitalization to M2 money supply ratio, 350%. You can see back there with the dot-com bubble, leading up to the dot-com bubble in 1980. Post that, we started going into massive asset inflation from 1980 to current, but from 1980 to 2000, you had the tech boom, the tech bubble, the dot-com bust, the boom and bust cycle there during that 10 years. And it really ramped up in the late 1990s, 97, 98, 99, and then finally popped in 2000. And then that started a financial crisis. But then we had a big major war with 9/11 happening. And then they lowered interest rates and started quantitative easing, which was QE infinity because it's never stopped. And then you blew up a housing market bubble and a stock bubble and a financial crisis, and then that thing imploded. And then they did all they know how to do. They lowered interest rates to near zero, and they started massive money printing. And then we were running into an overnight repo crisis in 2017 and 2018, and they were kind of with their backs up against the wall because they were already had interest rates very, very low. They started another lowering cycle and massive money printing again, and it wasn't doing anything. And so they got the gift, and the gift was COVID, and that gift let them go. They let them do things they weren't allowed to do before, blew up an asset bubble, a real estate bubble, a bubble, and everything. And it hasn't popped yet. Now we're even worse. We're almost back in the stock market. US M2 money supply percentage. It is sitting at 289% in 2024, and we're approaching the all-time high during the dot-com bubble, right? We all know how that ended out. It ended out very, very bad. And you can see First Bank of the United States was in 1800, Second Bank of the United States in 1820 to about 1840, the Civil War in 1860, the stock market's relatively peaceful. Panic of 1893 had a brief, quick sell off. And then the thing they don't show in here is the installation of the Federal Reserve, which was about 1913. And then look at all the nonsense that you get with the US stock market relative to US GDP and how violent bubbles start to happen and violent bust happen after that and depressions because it gets so high. You had a stable, consistent, steady, healthy stock market with boom and bust cycles, but relatively minor comparison to after 1913. You had World War One, massive crash. Then you had a big stock market bubble in 1929, and then it popped. Then you had a World War Two, and then you had post-war growth. Then you had the late 1960s and 70s, you had massive inflation in the United States, what caused an economic crisis and stagflation that they had to create a new term for because they didn't know what it was. And then you had an equity market and a stock market crisis and crash, right? And then in the 1980s, they jacked interest rates up uh, to suppress inflation, which it did. And then as the 80s went on, and as the inflation started to go down, they started lowering rates, they started printing money, and it started the dot-com bubble, it started a housing bubble, it started a financial crisis, and then it popped, right? And then they just blew it back up ever since then. And now we're at where we're at now. And it's only going to get worse. That's why it's very important to understand asset appreciation in a dollar depreciating world. Because the one thing you have to understand is the next 25 years, the next 50 years, the next 100 years. However long the US is the superpower, and even after the dollar gets dethroned, not if, but when they will continue to inflate the currency. They will continue to debase the purchasing power of our currency because that's what's been happening since 1913, since the institution and the disease, the fungi, the parasite, which is the Federal Reserve, since they got here and they took over the United States money supply. Since they took over the United States money supply, that is what a central bank does. They get in, they control your money supply, they start loaning you your own money with interest attached to it, and then printing it and debasing it, right? And the United States will continue to do that. We will continue to lose every 50 years right now. Since we went off the gold standard, in the last 100 years, 99% of the dollar lost its value from the dollar that was created 100 years ago. And at the current rate we're at, every new dollar that's created, from the day it's created, 50 years later, 90% of the value will be inflated away or debased away every day, every time a new dollar is created, right? And it'll continue to happen. And what you have to do and understand to become wealthy, or at least, the very least, maintain your current purchasing power, is to own multiple different kind of asset classes that appreciate or go in value when the dollar is debased or goes down in value and you lose purchasing power. So, real estate, that's why it's called real estate, because it's real. You buy real estate, you buy land. Land always goes up and holds its value, right? And there's only so much of it. You can buy gold and silver bullion, right? You can buy mining stocks if you're trying to get rich. Um, those things go up in value. You can commodities, nickel, copper, right? Things that don't go bad and they go up as the dollar goes down, or meaning as the dollar is debased, the things you're buying in said currency, it becomes more expensive to purchase, right? And it's very important to understand that. And that's why we invest, like the stock market goes up under dollar debasement, right? So that's a way you can hedge against the dollar debasement. If you don't want to own gold or silver, right? Some people don't want to own it. You can be in the stock market, right? And then if you have 100 grand in there over 10 years, if it 4x's, 5x's, right? 3x's, you've outpaced inflation over those 10 years cumulatively. If you got 300 to 500%, you way outpaced it. You can sell that back to cash and buy an asset like real estate. It can be a personal house if you don't have a house, or land, right? You can turn that winnings into real assets. And that's what you're trying to do, right? If you're in stocks and stuff, you're trying to get massive quick appreciation that outdoes inflation, by a factor of a few. So when you sell out back into the currency that you have, you can flip out of that currency into, if you're buying a house, or if you wanted to buy land, or rental properties and real estate, whether it's commercial or residential, right? That's the whole game plan. But you can't do any of this if you don't take some of your income that you make at work and stick it into investments, and continuously and consistently do it until you meet the time where you've decided that it's time to sell and realize some of these profits, and then do what you need to do with those profits, right? So, like the channel, subscribe. Peace and love. I got to get back in the work. Lunchtime is over, Jay.